Welcome back to the portfolio, everyone. And in this video, we're going over the 3 high dividend yielding stocks I added to my portfolio over the past week. The market is finally seeing some red. The overall S&P was down close to 10% at one point this week, but on Friday, we did see a nice gain and my overall portfolio went up over $700. So in this video, we're going to go over the 3 very high yielding stocks I just bought this week. I added to some positions in my portfolio and I actually started a new position in one of these companies. So in this week, I want to add and bolster my dividend income. I want to buy some companies with some nice high yield. I want to get into that 4+% dividend yield from companies that I believe can sustain that high payout and actually continue to grow it year over year. So thank you for tuning in. I am the Gen Z investor, and every single day we talk about the stock market. We go over overall stock market performance. We talk about any big news headlines in the market. And of course, we go over any big events within my portfolio, which currently sits at over $58,000. So I contributed more money to my portfolio this week, and I made 3 buys, and we're going to go over each and every company that I added to my portfolio over the past few days. The first stock I purchased was ABBV, ticker symbol ABBV, around $86 a share. This was the first time I've purchased this company. So I started a new position in this stock. Over the past 1 year, they were up over 19%. Over the past month, they are down 8%. So I thought today was a nice time to kind of jump in and start a position in this company, especially when they have such a very high dividend yield. You can see here on the 52-week range, they are trading somewhat towards the middle, nowhere near that 52-week high at around $11 a share. If we take a look at their dividend yield, before we do some kind of analysis on the actual company, you can see here they're currently paying out a 5.47% dividend. That is absolutely extremely high, with a payout ratio of 45% of their earnings, and they've been growing that dividend at over 20% averaged over the past 5 years, which is absolutely incredible. So this is an extremely high dividend yielding stock. I wanted to lock in some consistent high growing dividend income over this past week from companies who I thought were in a nice position because of this dip. If we take a look at this Morningstar report, they actually show that ABBV is actually undervalued at their current price point. They have a fair value for the stock at around $95, and it's currently being traded at $86, which represents around a 9 to 10% discount from their estimated fair value. And another analyst report that kind of backed up my decision to buy it right now was this one right here, which shows the average price target from over 15 different analysts for ABBV over the next 12 months, shows an estimated price target at over $100 a share at around $110, which represents around a 28% estimated growth rate from its current position. And if you also take a look at this other report, you can see here, currently recommended as a buy, 5 strong buys, 9 buys, and 4 holds. And all these different analyst expectations see earnings per share growing. You can see here, overall, they've done a beautiful job of beating expectations over their past earnings reports. And overall revenue is expected to continue to grow at a very fast rate. So that is some of the reasons why I thought ABBV might have been attractive right now. I went through a full analysis of the company, and of course, I took into consideration their future growth potential, read through their annual reports, and then obviously took a look at their financial statements. And then when I went and saw this Morningstar review and the other analyst reports, it kind of backed and fulfilled my decision on now is a good time to buy. Over their last earnings report, they beat on both earnings per share and revenue. And if we take a look at their financial statements, overall, this company's done a great job of growing revenue year over year. Beautiful upward trend in total revenue growth, $22.8 billion of total revenue in 2015, all the way up to over $36 billion in the past 12 months. They do post beautiful profits as well, just over $5 billion of net income in 2015, very close to over $7 billion of net income in the past 12 months. And that, of course, includes the pandemic, the economic shutdown, and all the bad news we've heard of as of late. So right, again, we're going to end off if we take a look at that dividend. So this stock was a new purchase in my portfolio. I locked in that 4.5% dividend yield, and I plan to hold this for the very long term. The second stock that I added to an existing position this week was the Southern Company. Currently being traded at $53 a share, down 13% over the past year. So this is a company that was hit hard in the month of March. We saw a recovery, but they have not fully recovered back to that pre-pandemic high of around $70 a share. On the 52-week range, they are being traded towards the low end, and this is another company that I decided to add to my existing position right now, only because I was somewhat underweight for the value I'd like to have per share in my portfolio, and I want to kind of average down. I had a higher purchase price on Southern Company for my initial purchase, and I believe locking in a 4.7% dividend yield from a utility company with a $56 billion market cap that I believe will be here to stay over the long term is a nice addition. So with regard to that dividend, when I purchased, it was yielding around 4.8%, an annual payout ratio around 81% of earnings, which is high for a dividend paying stock. But in the utility sector, because of the consistency of their cash flows, the ability to project future estimates in growth of revenue, and of course net income, I believe that this company will be able to sustain that. They are kind of a cash cow company with slower dividend growth year over year, and their 5-year dividend growth rate is around 3.4%. So although that's nothing astounding, what that means is this company continues to grow that dividend at inflation or slightly outpacing inflation each and every year. So your dividends are rising as inflation continues to rise. So you are not really losing money to inflation each year. You're either matching or slightly beating that every single year with your dividend payment. And I had no problem adding to my existing position with a nice 4.8% dividend yield in this company. With regard to their financials, if we jump over to their income statement, once again, another company that continues to boost positive revenue growth year over year. Over the past 12 months, we have seen a decline, but of course, once again, they are trying to shift their operations. They're trying to diversify away from just their core business to grow revenue over the long term. So this short-term decline in revenue for this regulated utility that I believe will be here for a long period of time is not too worrying for me. Of course, if we take a look, net income does fluctuate somewhat for this company, but overall, the long-term trend of net income is positive. With regard to their balance sheet, utilities do carry a lot of debt. Their operations are very capital intensive because they need to build a lot of infrastructure in order to actually generate and operate the type of business that they're in. So if we take a look, utilities don't always have the best current ratio. For utility, if they have a current ratio of around 1, that is solid. That is the industry average. So you can see here a total current assets of over $9 billion. Compare that to total current liabilities at around $9.3 billion. Their current ratio is slightly below 1, but that's not too worrying for me right now. If you compare that to their peers, I do believe they'll be able to manage that current ratio very well, continue to deal with that short-term debt, and operate the business very nicely. And one thing that's note that I feel is very important, their current liabilities are actually lower, and they've actually been decreasing them year over year, which is great to see. Overall, this company continues to grow equity, which is kind of key in a dividend-paying stock. You want to see those equity numbers growing over the long term, and that is exactly what is happening in Southern Company. $22 billion of equity in 2015, all the way up to over $32 billion as of the latest report. The third company I bought in this week is another stock that has been hammered. It is TD Bank, the Toronto Dominion Bank. This is one of the Canadian Big Five banks that also trades on the American Stock Exchange. They are down 20% over the past 12 months. So if you're unaware, Canada's got some of the best financial systems in the world. They have a core of 5 main banks that operate throughout the entire country that is extremely regulated, where there is not a lot of competition, and those 5 banks dominate the market. Every bank in Canada has been in operations for over 100 years. TD Bank has been operational for over 140 years, and all of these companies continue to pay out growing dividends year over year. And TD Bank did actually not cut their dividend during the 2008 financial crisis. They maintained their payout when a lot of American banks like JP Morgan, Bank of America, did slash that dividend payment during that same period of time. On the 52-week range, they are being traded somewhat in the middle, slightly towards the low side. They have a market cap of $83 billion and a current yield at 5.25%. So they are down 20% over the short term. And you can see here, over a longer term perspective, shares are positive, very consistent, Not a huge amount of short-term price appreciation, but over the long term, very consistent upward trend. Of course, then we saw the month of March, which has destroyed the company's gains. Taking a quick look at a Morningstar report, they actually show that TD Bank is 21% undervalued. The last close was around $45 a share, and they have an estimated fair value for the stock at around $60, which represents buying TD Bank today, you may be getting in at a 21% discount. If we take a look at their financial statements, they've been growing total revenue each and every year, 22 billion up to 23, 26, 27, 28, but of course the financial sector has been decimated during this pandemic, so a slight decline in total revenue over the past 12 months is not too worrying. I believe this company will be able to bounce back very nicely. But overall, before taking into account the pandemic, they were doing a beautiful job of growing revenue year over year. Same with regard to income. Income growing year over year, which is exactly what we want to see, but of course, lower income. We have gone through a 1 in 100-year event with this global issue. With regard to the balance sheet, for banks, we want to see investments grow, and that is exactly how TD Bank has been performing. Each and every year, total investments continue to reach new highs, and over the past 12 months, record-breaking total investment numbers for this company. Of course, they also want to see deposit growth because that's the money that these banks use to loan out and generate revenue and income. And you can see here, every single year, beautiful upward trend in net income and total deposits for this company. The more money that gets deposited, the more money they can use to loan out to other individuals or businesses, and the more money they can invest to help grow their overall business as well. Locking in a 5.25% dividend yield from a company that I believe will be able to maintain their dividend payment once things get back to normal, continue to grow it year over year, was a great stock to get into. A 63% payout ratio from earnings, very sustainable in this financial sector, and they have a beautiful job. They have an 8% annual dividend growth rate over the past 5 years. So even locking in a 5+% dividend yield right now, that dividend is growing at a fast rate each and every year. So those are the 3 stocks I added to my portfolio this week and I made buys in. I added a new position in ABBV, and I actually added to existing positions in Southern Company and TD Bank. I locked in over 4% yields in all 3 stocks. Those are bolstering my dividend income by over $100 a year for the next forever. That's the great thing with these dividend paying companies. The 3 that I invested in today, I believe will be operational for a long period of time. I don't believe the dividends are going to be reduced or cut in the short term. And I believe once the pandemic gets over, people can continue to live their lives as best as normal. I believe these stocks will benefit very well and continue to grow at a very fast rate. So thank you for tuning in, everyone. I am the Gen Z Investor, and I will see you in tomorrow's video.